So when you decide to take a look at the market, when you're planning out your trades on a Sunday or Saturday, or whenever you hop into the market and try to determine which opportunities the market may present for the week, you definitely want to look at the market from a complete top-down approach. Now, when I say a top-down approach, I'm talking about you going from the monthly time frame to the weekly to the daily to the 4-hour, even the 1 hour and below, depending on when you're going to take your trades or when you're about to take your trades. But you want to look at the market from a complete top-down approach so you can get an idea of which way the market is flowing. This will give you a higher probability of being successful once you decide to take the trades. So the first thing that we're going to look at, we're going to take a look at the British Pound USD, GBP USD, and we're going to start on the monthly time frame. Okay. Now, the reason why I start on the monthly time frame is I want to get an understanding of which way the market is flowing for the entire month, right? So when we're looking at the monthly time frame, we have to look at things a little bit different than we would look at it from the daily or the 4-hour or even the 1 hour perspective, right? So when we're looking at the monthly time frame, we pretty much only are interested in which way the market is flowing. We do not look for any trade setups or anything on this time frame, but we want to get a good idea on which way the market is flowing. Okay, so you can see right here for the end of, well, since 2020, last year, the market has been in an uptrend and is coming up upon this major level of resistance right here, right? So either price is going to continue to go through the level of resistance, it may consolidate up here, or it might do a complete reversal. But what we know is right now the market is going up based on what's taking place this month. This is last month and this is this month. So for now, we only want to look for buy trades, right? Well, let me say that lightly. For now, the market is going up, is in an uptrend, okay? So based on the monthly time frame, the market is in an uptrend. So now we're looking at the weekly time frame, all right? So what we want the weekly time frame to do, guys, is kind of confirm what that monthly time frame is showing us, okay? So as you can see, as you know, on the monthly time frame, we were going up, right? I put in my trend line right here. Let me adjust that trend line a little bit. So my trend line is right here. Sometimes I even like to draw out a channel. So what I would often do, I would duplicate the trend line, right? I will bring this channel right up here. So now I see prices flowing between this channel. So I can kind of project price to continue to go up, right? And make another high right here. But I also got to respect the fact that there is a major level of resistance that we're already upon. So if I do look for a setup to take the trade in a buy position, I will have to wait till this level right here is cleared. And once we go down to the lower time frames, you'll see what I mean about this level being cleared. Alrighty. So the weekly is to try to confirm or confirm which direction we want to trade based on what the monthly is saying. So essentially the weekly and the monthly, we want it to be saying the same thing. All right, so now I have went down to the daily time frame. So we're going from monthly to weekly to daily, right? In the 4-hour, 1 hour, whichever time frame you decide to take your trades on. So now we're looking at the same exact thing, but we're looking at it on a daily time frame. And remember, now when we're looking at the daily time frame from line to line, it's 1 month of price data, right? Also on the daily time frame, I often come in and make adjustments to my trend lines because it gets more defined the lower you go. So I can make adjustments to my trend lines, or I can even add trend lines. I can add more trend lines to help me out. So what I'll do, I'll delete this one because now I want to duplicate this new trend line. So let me go ahead and boom. There it is. I kind of begin to ignore these wicks, right? Why do I say this is a wick? If you look at it, you can tell really this isn't a wick. These are solid candles. But let me show you guys something. If you highlight this, these are only wicks. So I'm gonna put that highlight right there. Now watch this. Right? You see you have candles poking out here, right here, right? But if you go to a higher time frame, like if I go to the weekly, you'll see this is only a wick. This is not real. This is a run up. This could be a stop hunt or just a run up in price. So this is It depends on which time frame you're looking at, but I know based on looking at the charts for so long, I know that these weren't real bodies. These were just wicks, right? So let me get back on the daily. So I don't ignore the wicks, but I know to draw my trend lines based on the bodies. So I know this right here is a wick, right? I know this is a wick. So let me try to. There's no need to duplicate that. You guys get the point of what I'm saying. I know this is a wick, and I know on a higher time frame this is a wick. So my trend line actually is right here, right? So what's going on the daily, right? So now I'm looking at it. I see price hits this level right here, and now we're starting to move up. Exactly what was shown on the weekly as well as the monthly. You got a level right here of resistance. Price got here, now it's beginning to consolidate. So price may reverse to the downside, but eventually we think price is going to go up because we know in the smaller time frames and based on the monthly, the daily would be a smaller time frame. Price never just continues to go straight up, right? It could do this, but price, it never continues to go just straight up in the direction that we want it to go. Price has it goes up, then it breathes a little bit, it gives a little retracement, goes up, may give a little retracement, but overall, we believe price is going to go up to at least retest this level right here. But again, before I begin to take a trade on this, I have to wait until price breaks out of this level of resistance, right? But overall, price is going to go up. And then I'm going to add this trend line right here because I see what price is. No, I won't add the trend line there. I add it here. So I can kind of expect a retracement back down to here and then a movement back up top. Because overall, this is where I think price is going up here, right? But let's look at this from the 4 hour. So let me keep this line. I'm going to actually get rid of, make adjustments to this line, right? Okay, so that's the daily. Now let's go down to the 4 hour. And again, we want price to confirm the same thing. All right, so this price chart is going to look a little different because remember, we're looking at smaller time frames. So it's saying the same thing, but it's looking at smaller time frames. So here it is now. So remember, I just put in this trend line right here, right? Now I can make another adjustment to the trend line if I want. Boom. Why is this line so important, right? Now remember what I said. Price could retrace back to this level right here, right? But ultimately, we believe price is going to go up. But this trend line right here is so important because if price breaks this trend line, then you kind of confirm the move back to the downside. So if you're a counter trend trader, you probably can take that trade right there for almost 100 pips back to the downside. But I wouldn't, but that's not my trading style. I would wait till price comes here, shows me that it wants to go back up. I will go in and set a trade right here as a buy position. And then my stop loss will probably be behind this level right here, right? Okay. But yeah, guys, that's how I do my top-down approach. And if I'm on the 4 hour time frame, I'm just looking for the low of the week to be created so I can buy it back up. Let's look at this on the 1 hour because I know we have a lot of 1 hour traders that watch my videos. And essentially, it's saying the same thing, right? Price broke down, consolidated right here. If it goes lower, price can go this low or it can even go this low, right? But whatever it does, here's why I say it can go this low. Because based on this level right here, resistance, support. Right? So you can trade price down to here, or you can trade price, it stops here. I doubt it's going to stop there. That doesn't look like a major level to me. But it has support, resistance, support, support. So even if you take the trade here, which is 35 pips, the price wants to continue to go lower. May bounce here off this trend line / horizontal support line, but eventually we want price, or we believe price is going to go higher, right? So yeah, guys, that's how I do my top-down approach. I know you guys are waiting for this video for a while, but here it is. I start on the monthly, the weekly, the daily, the 4 hour, even the 1 hour time frame to get an idea of which direction that I would like to trade the market. Because I find it to be more advantageous, or you are, at least for me, I'm a more successful trader once I go in and I look at my trades, my potential opportunities for the week, instead of just logging on and just searching for trades. So that's my top-down approach. Is how I approach the market. I hope you guys enjoyed the video. Don't forget to like the video, share the video, and subscribe to the page, Forex King.